with the latest on the corporate front, all the market trends, expert opinion, and sound business advice. It is your unique window into the business world, direct from the heart of China.
Hello and welcome to Biz Today. I'm Zhao Yang in Beijing. Coming up, we will have half an hour of business news and analysis. On today's show, China's Hainan Free Trade Port will launch independent customs operation in December. So what are the details? And a new study shows that nearly 60% of the world's sovereign wealth funds plan to increase their investments in China. What is driving this? And now let's begin with our top story. China is intensifying its opening up by moving toward island-wide independent customs operations in the Hainan Free Trade Port on December the 18th. This means flows between Hainan and overseas markets will be managed under simplified procedures. The proportion of zero-tariff products in Hainan Free Trade Port will increase from 21 to 74%. China's top economic regulator formulated new policies to conduct independent customs operations. So for more on this, joined us on the line now are Dr. Zhou Mi, Senior Research Fellow with the Chinese Academy of International Trade and Economic Cooperation, Li Lun, Assistant Professor of Economics, Peking University, and also Yan Liang, Professor of Economics, Willamette University. So I will start with you. So what does Hainan, this island-wide independent customs operation, signal about China's evolving approach to trade liberalization and global economic integration?
Right. So this island-wide independent customs operation, it refers to the establishment of a designated area under the special supervision of customs authorities that covers the entire island. And so there will be sweeping trade and tax liberalization policies, as well as I would say financial policies that would design to boost investment, trade, and also industrial development on this tropical island. So the idea is that this will be a testing ground for the higher level openings. So this would be really a major milestone where, whatever that achievements that would come out from this sort of experimental zone, this independent customs operations, the experiences could be promoted in the rest of the economy, and also the lessons, of course, will be learned as well. So this really marks a new landmark, I would say, in China's approach to a high-level opening and the very calibrated and regulated integration into the global economy.
And Li Lun, so how significant is this move for China's broader strategy of high-level opening up, do you think?
Yeah, so I think it signals a very major step in China's very high standard opening up strategy, because this is virtually kind of transforming the import and export policy for Hainan, and this has never been done in the history. So I think this hopefully will help Hainan to evolve both as a testing ground for further reform, but also as a hub for innovation, for trade, for future economic development, and hopefully this could also scale to other regions and other free trade zones.
So, Dr. Zhou Mi, the proportion of zero-tariff products will rise to 74% from 21%. So what are the benefits of this move?
Yeah, it's very obvious that when we are having lower tariff, it means that consumers and also enterprises who are going to import those things from other countries can benefit from lower tariffs. I think it's not just about several percentage of this tariff. Those percentage points is not so significant, but we have to look at the trend. So we know that Hainan Free Trade Port was proposed 7 years ago. It was just the time when Donald Trump has trying to put some tariffs on Chinese products for the first term. So I think that, in the Boao Forum, presidency has proposed that we should try to do more to improve our opening up and trying to set up the free trade port in Hainan. So I think that is a very important decision and a signal that we can let the world hear from us, that we are not just trying to, block ourselves, trying to build walls. We are doing on the country things. We are opening, we are lowering our tariff. So the trend is still there. If you're looking at the data, I think that in the previous 7 years, we have seen that the tariffs of the United States has increased a lot, especially for this year. They are still going to increase more for higher tariff. But for China, we continue to lower our tariff. I think it's a kind of a very important trend. It's a continuous trend. So the world has becoming, in two parts, two branches. The one is trying to build wars, trying to increase the tariff, while the other is trying to lower the tariffs. So it's a real important thing. For the companies who are doing businesses in Hainan, they can benefit from the lower tariff. So if you're looking at the percentage, I think they're almost 50% higher compared with what is now doing in the Hainan province for the zero tariff products items. So it's just about the first line. When we're talking about a second line, they also have a better, principles or criteria to support the value-added processing in Hainan. I think it's very attractive. So I mean that is not just about the tariffs itself. It is going to create a very stable, sustainable, and open space for the companies who are trying to do businesses in Hainan. That is even more important thing.
And yeah, so officials say that nearly all enterprises and institutions on the island will benefit. So what could this mean for the business landscape in Hainan?
Well, I think these measures would definitely help to boost investments and businesses on the island, because as we just mentioned, not only because the tariff is lower, but also the whole regulation is very much streamlined. So, for example, now the imported zero tariff goods will be managed under a so-called negative list, replacing the previous list for zero tariff items. So, in other words, most, as you just mentioned, 74% of the tariff lines are now zero tariffed. So only the ones that will be taxable will be on the sort of negative list. So it's very straightforward for business to understand what they need to pay and what they don't. And also noticeably that if the product is with 30% of the local made content within the island, then they are tax exempt. They're tariff exempt. So all of this, I think, will help to encourage more businesses come to the island and have their processing, have their value added on the island. Now, I think, as Dr. Zhou Mi also mentioned, it goes beyond this practical meaning. It also goes to the symbolic and also, I think, on the signal level, where the signal is that businesses are welcomed here. If you need to import products from elsewhere, you are still welcome to come to Hainan, and the business cost will be lower. The regulations will be streamlined, and the government also not only just going to have the zero tariff policies, but also have a whole list of approaches to promote their economic development, to help to foster supply chain on the island, and also have all the policies that would help to make businesses in a more business friendly environment. So I think all of this will help to attract more businesses to Hainan, not only from the mainland, but also from abroad. So it is a holistic approach to improve the business environment, to increase the liberalization speed, and also to promote this more quality connections to the rest of the world.
And Li Lun, we know that tourism, modern services, high tech, and tropical agriculture now make up over 60% of Hainan's GDP. So which of these sectors is most promising under the free trade port model?
Yeah, so I think, of course, the existing, sectors such as tourism and services are definitely going to benefit from this policy, because we're definitely going to expect a lot of increase of tourists and travelers to Hainan, which is going to bring sales of duty-free products, bring sales in hotel, in restaurants, in other local services. So this is definitely going to be benefited by the policy. But I think in terms of high-tech manufacturing and tropical agriculture, so the zero tariff policy is going to, for example, help the local farmers to import, the equipment, tariff-free, and also, companies that depend on harvesting local agriculture, local products. For example, manufacturers of coconut water can better set up their companies there because it's it's tariff free. They can import their equipments from abroad and manufacture there. So I think these innovations in policy will offer fresh opportunities not only for the current tourism and manufacturing companies, but also give the international investors and entrepreneurs and interest to kind of invest more heavily in these in Hainan.
And so, Dr. Zhou Mi, so what opportunities does the free trade port open up for the international talent and entrepreneurs in Hainan?
Well, if you're looking at the announcement by the government, I think that they mentioned that the countries, the people from the 85 countries or regions, they can go to Hainan with a visa-free policies. I think it's not only about the tourists; it's also are covering so many a wider range of the people. So the most important thing for the talents when they are trying to go to somewhere is whether they have the opportunities to have a better performance and less risks. I think Hainan have both characteristics. So if they are trying to, talking about the tariffs, and also there are a lot of other measurements like the reform on the taxes, the income tax are reduced. I think it's really beneficial and attractive for the people who are having a much higher income. So they can go there to find good jobs, and that is also beneficiary for the companies to have a cluster, distribution in Hainan and trying to discover some of these technology or digital economy related industries. So for the talents, they can go there to find more opportunities when they are facing many challenges nowadays in the world, different technical barriers. They can go there to find that. And the second is about the risks. When they are going there, I think they have a very good opportunities to reduce their risks because of the fiscal policies, monetary policies changes, or the fluctuation of the financial environment. So they can try to find a better and more stable environment in Hainan. I think that is really important for them to make a better use of what they have learned and trying to have a collaboration, not only employed, but also trying to create their own startups sometimes.
Well, we're speaking with Dr. Zhou Mi, Senior Research Fellow with the Chinese Academy of International Trade and Economic Cooperation, Li Lun, Assistant Professor of Economics, Peking University, and also Yan Liang, Professor of Economics, Willamette University. And after a short break, we'll take a look at nearly 60% of the world's sovereign wealth funds are planning to increase their investments in China. What's driving this? Stay with us.
Welcome. I'm Elaf Ellard, economics professor and member of the Data Science and AI Center at New York University, Shanghai. On the World Today program, you can find in-depth and impartial insight, as well as critical commentary on key trends in the Chinese economy, financial technology, business, and blockchain. To prepare for the world tomorrow, join me on World Today.
You're listening to Biz Today. I'm Zhao Yang in Beijing. Global sovereign wealth funds are doubling down on China. A new study from Invesco shows that nearly 60% of the world's sovereign wealth funds plan to increase their investment in China over the next 5 years. Interest in Chinese assets was particularly pronounced among sovereign wealth funds in Asia Pacific and Africa. And around 70% of North American funds, which are focused on long-term structural opportunities, also showed a willingness to increase their exposure to China. So, Yan, what do you make of this funding of so many sovereign wealth funds in the world plan to increase their investments in China? What's driving this?
Well, I think there are push factors and also pull factors for these sovereign wealth funds, and also central bankers wanted to reallocate their assets towards China. I think when it comes to the pull factors, many of the interviewees, they mentioned the reason that they are reallocating global funds are due to geopolitical instabilities and also some of the inflationary pressures. So they're seeing China as a way to not only provide strong returns, but also help to diversify their portfolios. And also, they cited the increased market access for foreign investors as one of the reasons that they wanted to pivot towards China. So I think all of these to say that China has become a very attractive destination for these sovereign wealth fund managers to allocate their funds towards China. I think there's also push factor coming from the United States, where not only I think the economy now is in question due to the tariff war and also this mega, fiscal budget, but also because of Donald Trump's anti-globalization, anti-trade tariff policies. So I think, those factors become a sort of wake-up call for these investors not to concentrate all their portfolios, too much in the United States and continue to overweight on the U.S. markets. So I think due to both the reasons, both to the factors, the push factor and the pull factors, that we're seeing, more investors coming to China. And I think this is very significant. The survey was conducted among, 83 sovereign wealth funds and 58 central banks across the world, which collectively managed, $27 trillion in assets. So it is quite a representative, I think, sentiment in the market that investors want to invest more in China to diversify the portfolio to increase the returns.
And Dr. Zhou Mi, so what do you think are driving this?
Well, yeah, I agree with Ian. There, both sides are trying to create a different situation. I think that for most of these, this fund, their main target is not only trying to create more value. The most important thing, even for them, is trying to be stable their wealth. So for them, how can they just guarantee that they can invest in the future? It's a very important problem. So I think that in China, we are creating a better environment for the industries related to the future industries, the artificial intelligence, and also the digital economies. We are creating a new potentials for continuously development for the new energy vehicles and also infrastructure. I think for those funds, they want to have a very long term of the investment for maybe 20 years, 50 years, or even longer. They want to keep their treasuries there. And in China, they see the future. Well, as Ian has mentioned that, some other markets is fluctuating too much about the borders of the tariffs, about their inflation, about the geopolitical conflicts. But China is a super large market. We are attracting those companies and also the fund with more preferential and more open policies. That is also what the Chinese government is trying to do. We want to keep our promises, and that is also bringing so many hopes for those funds. They want to have a better future.
And Li Lun, as Dr. Zhou Mi mentioned, digital tech, advanced manufacturing, and clean energy actually top the list of the most attractive sectors. So why are these areas?
Yes, so I think part of the reason is that we have a very large market, also as well as a large talent pool for these sectors, and also for green, for example, clean energy and AI. We're already seeing vast application of these technologies in China in every aspect of our lives. So compared with US, who is cutting subsidies to, for example, the renewable energy sector, China is actually keeping the subsidy and keeping the promoting foreign direct investment in these areas. And in terms of digital technology, for example, AI, the gap between Chinese technology and American technology is shrinking. In some areas, for example, in robots, China is even leading. So the reason for these sovereign wealth funds to pay interest to Chinese companies is, I think, most of all is having higher returns, as Professor Liang already mentioned. And another reason, of course, is diversification. So I think it makes sense to kind of rebalance your portfolio so that it reflects a diversification of your funds, so you're not putting all the eggs in one basket.
And Yan, so do you see China's green tech sector offering real returns, or is it more about long-term positioning?
Well, I think it's a matter of both. I think China is now very much leading in the green energy sector and green tech sector. We know that, we just mentioned about Hainan. Hainan's energy transition is really advancing very rapidly. Their clean source now account for over 70% of power generation. And I think this is really just an example of this booming industries. I think China really has a strategic interest to promote, green energy, both for environmental sustainability, but also for strategic energy independence and sovereignty. So, with a lot of talents, with a lot of capital injections, and with a lot of policy supports, I think China now is very much leading in the green energies. When you look at the, vast manufacturing capacities in solar panels, in wind turbines, in the green energy installation, but also looking at, the EV adoptions. Now, over half of the global EVs are, manufactured and adopted in China these days. And so I think this is definitely the bright spot for many of the companies and investors to invest in addition to other tech sectors, like the low altitude economies and also AI, robotics, and so on and so forth. So I think that, China is not only a place where it has the manufacturing capacities, but it's really also leading in many of the tech sectors. Let's not forget this survey by Invesco was conducted in January to March this year, which is right after the release of the DeepSeek. So I think that really also galvanized the investors to see the potential to develop technologies, the next frontier technologies. And so I think that also made China become a very attractive destination for the long-term investments, but also I think the medium-term investments as well.
And Dr. Zhou Mi, so funds from Asia Pacific and Africa are showing strong interest in China. And at the same time, the North American funds are also showing, growing interest. So does this suggest a disconnect between private investment logic and the geopolitical narratives?
Well, it is true that different countries and different regions, they have their history. So it's natural for China to have a lot of relations with the ASEAN countries and also the countries in Africa. But it's also about the history. We know that the world is changing. And I think that although there are some kind of problems are protectionism, unilateralism, but the general trend is that we are heading on for the better globalization based on the technology and the information sharing. So for the companies, even or the investments or the fund, they come from North America, they still fear about uncertainties. I think that is the logic. The market is trying to show us that no matter what the government is really want to do, especially the government of one country really want to do, the market is always have its own logic. I think the logic is they want to have a better performance and a better profits by investment. They would like to have a higher return and stability. So it's not a problem about the geopolitical tensions. It's about the logic. I think that is the reason why we are seeing that the funds from the North America, they are seeing the opportunities and they are learning more by their competitors and also the messages coming from different governments. So they have their own decisions.
So so North American funds are also showing a lot of interest in, investments in China. What is driving this?
Well, I think, as I mentioned earlier, the decisions are driven by these global investors mostly due to geopolitical instabilities and also inflationary pressures. So I think for geopolitical instability, and as I think Dr. Zhou Mi just mentioned, it is part of the calculations of the investors. They do not want to put all their eggs in one basket. With the U.S.-China, in tension, they want to diversify away from, the United States. It is not a good idea to concentrate all your portfolio in one place. And so I think that is one of the reasons, but also I think inflationary pressure is another major reasons, as the United States just passed this so-called One Big Beautiful Bill, that is expected to increase the federal debt by about 3 trillion in the next 10 years. I think investors feel that this is potentially could drive up inflation. As well as, the tariff policies. So I think, China has been having disinflationary trend. And so I think that makes sense for investors to diversify away from the United States as well. So I think giving those two reasons, plus, as I mentioned earlier, was the very strong, pull factors, where China now is a really place where it offers both high returns and also potential for growth in the tech sectors, I think this becomes a really unresistible, I think, proposition, which is very different than, just a few years ago when many of the North American investors said, China is quote unquote uninvestable. But I think now they really redo their calculations and understand, to diversify and to hedge against geopolitical tensions, it is actually better to, reallocate their portfolio to the very much underweighted Chinese positions.
So, Li Lun, are we seeing the beginning of a long-term structural realignment in global capital flows toward China?
We're definitely seeing, more attention towards China, and because the global share of these countries, whether we're talking about ASEAN countries, China, or the BRICS countries, in terms of population, in terms of GDP, are all rising compared with for example the G7 countries or the OECD countries. So I think more and more China, because China has heavily invested in the future technologies, the future sectors such as AI, such as green energy. So as we gradually face towards the new era in terms of technology, in terms of, for example, robots, I think it's very natural for global capital to flow towards China, because they're going to find that China is the only provider of some advanced technologies, that China is the only provider of doable, or for example, in terms of Unitree, China is Unitree is the most affordable provider of these humanoid robots. So they're going to see more and more of these sectors of these products emerging from China, and I think that's irreversible trend, and that's going to happen in the future.
Well, we're speaking with Li Lun, Assistant Professor of Economics, Peking University, Dr. Zhou Mi, Senior Research Fellow with the Chinese Academy of International Trade and Economic Cooperation, and also Yan Liang, Professor of Economics, Willamette University. And that's all the time for this edition of Biz Today. To listen to this episode again or to find more previous episodes, you can download our podcast by searching for Biz Today. I'm Zhao Yang in Beijing. Thank you so much for listening.